Welcome to the Deep Dive. Today, we're digging into a stack of sources, all centered on Nationwide's chief economist, Robert Gardner, and we're trying to figure out the UK housing market's biggest mystery of 2025, which is, how did it survive? And what does that mean for you planning your finances for 2026?
Right, that's the big paradox we need to crack. You had mortgage rates, hovering around 3 times their post-pandemic lows.
And consumer confidence was pretty subdued.
Exactly. But the market didn't crash. It was just resilient. And that resilience, well, it really sets the table for what we can expect next year.
So let's just lead with the hook, because this is the headline everyone wants. The forecast for 2026. What are we looking at?
The consensus looking at this data is annual house price growth settling in broadly the 2 to 4% range.
Okay, it's a modest growth.
Very. And that stability comes from this near-perfect moderation we saw in 2025. We watched annual price growth just steadily slow down.
Or what, late 2024?
Yeah, it went from 4.7% at the close of 2024 all the way down to 1.8% by November. The key thing is prices ended the year pretty much where they started.
Right near that all-time high from mid-2022.
Almost exactly.
I do remember the chaos in the spring, though. There was that wild volatility in March and April.
Yeah, but that was really just noise around policy.
The stamp duty changes.
Precisely. Everyone rushed to beat the deadline, which caused this temporary spike, and then, a predictable bit of softness right after. Once that cleared, the underlying picture was steady.
But if demand held up, where was the money actually coming from? With rates so high, you'd think buyers would just be locked out.
Well, this is what's so fascinating. Affordability constraints actually eased a bit.
Eased? How?
For buyers, the key relief was that house price growth was running well below the rate of earnings growth.
Ah, so your income was finally catching up to the cost of the home.
Your income was catching up. And you couple that with a modest decline in mortgage rates, and that was just enough to underpin demand.
And it was first-time buyers really carrying the weight, which that feels like a powerful sign of some kind of silent strength in the market.
Absolutely. Their share of activity stayed above the long-run average. So, if you're a first-time buyer, this data shows the gates didn't just slam shut.
In fact, the opposite happened.
Sort of. The credit window actually opened a little wider. The share of high loan-to-value lending, we're talking deposits of 15% or less.
Okay.
It reached its highest level in over a decade. The industry made it easier for committed first-time buyers to get in.
But was this strength felt everywhere? Or were there big regional differences? We have to talk about that regional fracture, specifically Northern Ireland.
Northern Ireland was the absolute outlier, just a huge outlier, averaging a massive 11% annual growth in the first 9 months.
11%. That's almost 4 times the UK average, which was what, 3%?
Yeah, almost 4 times.
So is that a real sign of recovery, or is it just volatility from, low transaction volumes?
No, it's definitely a recovery story, but one with huge context, meaning despite those massive gains, NI prices are still around 6% below their 2007 peak.
Wow.
Now contrast that with the UK overall, where prices are nearly 50% higher than in 2007.
So it's catching up, but from a very, very low base.
Exactly. The typical home price there is now about 79% of the UK average. It's moving up, but it has a long way to go.
And meanwhile, London was the weakest performer.
By far, clocking in at just 1.3% growth.
Which just reinforces that wider trend we've been seeing, right? The North outpacing the South.
It's the perfect example. London's sluggishness is part of this much wider movement, where northern regions are decisively outpacing the South. That price gap, it's now at its narrowest point since 2013.
That regional rebalancing is, you could argue, the biggest story of 2025.
I think it is.
So let's bring it back to 2026. We're saying 2 to 4% growth. Is there any policy factor we should be watching?
The only one on the immediate horizon is the increase in taxes on property income. The high-value council tax surcharge is minimal. It affects less than 1% of properties, and it's not until 2028 anyway.
So not a big deal for most people.
Not really. But that income tax change, it might dampen the buy-to-let supply. Fewer rental properties could mean that upward pressure on private rental growth continues, even while the sales market stabilizes.
Okay, so let's put it all together. 2025 was really defined by 2 core trends. This silent strength from first-time buyers and a really profound regional rebalancing.
That's the whole story. The North, led by NI, closing the price gap on the South.
Precisely. And this leaves you with a really interesting question to think about.
It does. Given Northern Ireland's huge price gains this year, while still lagging its own 2007 peak, what will it actually take for regions with these historic losses to truly recover those levels, especially when the rest of the UK market is hitting new all-time highs? That gap, That's the challenge for the next decade.